added fewer jobs than expected in July, with wages falling and more people dropping out of the labor force. What does this mean for consumer confidence? What does it mean for the economy? What does it mean for where we're going? Greg McBride, a senior financial analyst at bankrate.com, joins Money Beat this morning to talk about it. Greg, I know you were watching the numbers at 8:30 a.m. What did you make of this report?
No, this doesn't give you a warm and fuzzy feeling at all. I mean, as you noted, the job numbers came in lower than expected. Both May and June were revised lower. Average hourly earnings up less than 2% year over year. That's barely enough to keep pace with inflation. And half of the job growth that we did see this month came from retail, food and drinking establishments. Those are not high-paying jobs.
Right. You know, it's funny, Greg. I think you and I we're drawing our water from the same well, because I've been saying much of the same things for a long time. I've been saying you need to look at not just the number of jobs created, but the kinds of jobs created. And I think people are catching on to that. And I think when you look at the GDP numbers we got this week, when you look at how little growth there really is in the economy, you have to understand that we are not creating the kinds of jobs that will really get the economy going.
Absolutely. I mean, why can't we get this economy out of first gear? It's because people don't have a lot of spare money to throw around. And, let's not overlook the fact that there's over 8 million people that are working, but they're working part-time, even though they would prefer to work full-time. So, I think what's going to grab a lot of headlines here is the fact that the unemployment rate dipped to 7.4%. But I dismiss that entirely. When you add in the more than 8 million people that are working part-time, plus the nearly 2.5 million people that aren't counted as unemployed simply because they're not looking for work, the unemployment rate's more like 14%. And while that's down a little bit from June, it's still higher than it was in the spring. So again, this labor market is not hitting the cover off the ball by any means.
Greg, what does this mean? We know now that we had GDP growth in the first half of the year was about 1.4%, not a very great number. What do you see in terms of the second half, in terms of growth, and in terms of consumer confidence? I mean, we see these consumer confidence reports, and people say that it's rising, it's coming back. Where are we really?
Well, in terms of consumer confidence, we are seeing a rebound there. And in bankrate.com, we do a financial security index every month. We see that people do feel better about their job security. They're more comfortable with their debt loads. They're reporting higher net worth and are feeling better about their overall financial situation. However, the fact is, they may be working, they may be feeling more secure in the job. That doesn't mean they're getting big fat raises. That doesn't mean that they're in a position that they go out and spend themselves silly. And that's why, again, this economy's stuck in first gear. So despite all the forecasts for some ramp up in economic growth in the second half of the year, I'll believe it when I see it. I mean, I still think we're in this slow growth economy with high unemployment and low inflation, for the foreseeable future.
Right. And where does this put the Federal Reserve? I mean, most people think that in September they're going to announce something, some sort of tapering of the stimulus programs. They're very attuned to the jobs market, and I think they're attuned to more than just one single number. I really do think they're kind of looking at the whole picture. What does this report do to the Fed?
Well, look, I agree. In September, we're going to hear a lot more about tapering. I don't see how they can start tapering in September. I mean, let's just look at what we've got just in the last 48 hours or so. Economic growth rate below 1.5% in the first half of the year, and we got a job market that's, I think treading water at best. So this is not an environment where the Fed can feel comfortable starting to taper that back. Yes, they'll talk more about it, but again, I think realistically, that's not something that they can undertake beginning in September.
All right, Greg McBride at bankrate.com. Thank you very much for coming in today. Appreciate it.
Thanks for having me.